Jeff, how are you, sir?
I'm great, Ryan. Good to see you.
Yeah, we were just talking about that we chatted way longer than I thought ago. And I was just saying, I'll just say this for the audience again to tee this up. When we talked, I was like, oh my God, it's a marketer that actually is like doing their strategies and can talk about why they're doing them as it relates to the value of a company. And that was the entire point of our conversation. So I'm not going to name this episode Marketing Pixie Dust and Unicorn Spend, because that's what I did a while ago. And I want to just like give you some time, Jeff, to kind of give you a little bit of your background, what you're doing now, because I think that context will help of like why you have this lens. And then we're going to unpack like how to be tying what, marketing and strategies to the long-term goal to make it all worth it.
Beautiful. Yeah, so I'm a reformed digital marketer in the sense of bringing the math back and cost of goods sold and more. So we'll talk a lot about that. The background is 20 plus years in digital marketing. Co-founded an agency that they grew very large, bought by one of the big holding companies called Omnicom, and managed massive, $10 million to $100 million spenders in digital media. So the likes of Mercedes and FedEx and Lowe's and big household names. So it was always interesting, and I rode that search wave, that social wave, and then I see this e-com and marketplaces and Amazon wave really that COVID blew out of the water, right? So wanted to jump and started aiCommerce, focused on marketplaces and heavily Amazon as kind of the big place. But you've seen this consumer shift and even a marketer shift from coming. Really trying to get people to your website, which is still important, but now the people, right, fish where the fish are at the marketplaces. They're on Amazon, they're on Walmart. So now it's just using, the old tried and true search, a little bit of display to try and introduce your product and get the sales there. The difference, though, is exactly what you talked about. Understanding the cost of goods sold. I love to say revenue is vanity and profit is sanity. Even in the world of marketplaces, you hear, I'm a 7 or 8 figure seller. Cool, but what are your margins, right? And really, and I'm sure we'll talk about this today, understanding what your break-even ROAS is, right? Your return on ad spend. Understand what, ROI is truly profitable. And if you're in growth, at least break even, right? What's the impact of the organic visibility when you spend more? Those algorithms are connected. So in wrapping up kind of the background, been doing this for a long time. The last several years focused on marketplaces. And I'm also a professor at Wake Forest University. So we've created a digital marketing master's degree and teach paid digital media.
No way.
At Wake Forest.
How about that? You're not going to be teaching about SWATs and flyers like most colleges out there these days.
So there is math always involved, right? So we really get into it under the hoods and understanding the business, right? I mean, you have I worked with a big major toy company. They had $20 wooden puzzles and $200 play kitchens. And you can't tell me that you have a $6 ROAS for both. Like the contribution margin is extremely different. The profitability, extremely different in those two products. And I'm sure the COGS are as well, right? Even shipping costs, right? That all needs to be factored in to really sharpen your pencil and be a smart and strong marketer, in my opinion.
Oh my God. I mean, for the listeners, and I could just like hit the off button and just be like, that's the thesis here.
There it is. It's that simple, right?
You know what's crazy, Jeff? It actually is. And I don't know what over the last 10 to 12 years got us buying. And I don't know if it's just all the stuff that we see on the big magazines of just burn cash and at some day, 40 years from now, you might be profitable. And that, I mean, there's a time and place for that, but 95% of our the companies need to figure out how to make money for a reason to have the value grow. Before we because you just even dropped some of the concepts that I want to unpack, like that 2 examples, shipping costs, ad costs, and how to calculate the return on ad spend, and all of that I want to unpack. But like, where in the hell in your journey did you have the intersection of marketing and finance, and you realize that this is the truth, right? Like this is what makes marketing actually exist for a reason. But like, how did that come to you?
I mean, honestly, only about 2 years ago with aiCommerce, and my partner owns brands, and in all my experience with all those big brands, I mean, you ask them like, hey, you gave me a $6 return goal. How'd you get 6? And the answer usually was, well, it was $5.50 last year, right? It was $5. We just want it better. And then to understand the counterbalance of volume, right? Again, to think through, okay, cool. If I got you 6, but then less overall revenue, is that better? Is efficiency more important than, and then it got to like, well, what's that break even? So here's how bad, like worst case scenario efficiency could be. And of course we want to beat that, but that would drive the maximum amount of volume. So understand that counterbalance for sure. And, back to my partner, he owns brands, we own brands, full soup to nuts. So, he's really the one that got in and said, hey, it's not as simple as a lot of these big brands think it is. And these little scrappy brands have to really, again, sharpen the pencil and understand all of these costs, especially in marketplaces, right? Because you're potentially farming out, your shipping and fulfillment to Amazon. That's going to cost something. You've got your ad spend. That's going to cost something. And on and on, agency fees, et cetera. Let's bake all that in. And again, Amazon, that algorithm, that A9 algorithm, the more you spend in ad spend, right, the more you take advantage of their advertising opportunities, the organic visibility goes up. So, truly, how can I just potentially break even on the ad side, drive my profit from the organic side, and then measure a holistic, total return number versus that silo of advertising versus organic.
Oh my God, I love it. And and I want to unpack a little bit different parts of this, but before, just kind of like level setting for the audience, because this is applicable to anybody, regardless of whether they have a brand, an Amazon, a company. I mean, this is truly, you have a company, you need to sell something, products or services, and then make a return for a more valuable business. This applies. And it's just interesting, Jeff, is like, so both of my partners came from the CPG world. And so they used to sell, products into Kroger and all this stuff. And it's the same damn business model, man. So I just wanted to lay this out there for the audience that a brand is just a company, right? It's a company that sells, whether it's Kind bars or whether it's whatever it is, coffee, whatever it is, it's a company. So just wanted to make sure that the listeners, as you're saying, that you're talking about a company that needs to spend money to grow.
Yes.
And so when I think of I want to throw out a narrative that I hear all the time. And I think you and I could probably quickly see through what's actually the problem. But I see that the narrative I hear a lot is I need more sales. I need more sales. I need to spend more money in marketing. I need a new strategic plan. I need more sales. And I just got done with the intro of this mini series of revenue is my target. It's just ridiculous, right? And so when someone I'm sure, well, I shouldn't assume, but have you had it? What would you say to the person with that narrative? How would you challenge them? Or if someone came to you and said, Jeff, essentially what they're saying underneath their words is, you're going to solve all my growth and profitability problems through more sales. How do you unpack that and then recalibrate that narrative so then we can kind of do that for the rest of this interview?
Yeah. I mean, not every sale is a good profitable sale. And I think they need to realize that. And there's certainly a stage in any company where branding is important, right? To build a brand. You look at something going back to Amazon Marketplace, you either have the lowest cost, you have a real product differentiator, or a known brand that people say, hey, heard of this brand. They've got, they're going to stand by their product and I'm willing to pay a little bit more for it. So if you're not one of those three things and you want to, be that known brand, you're going to have to invest in it. So, while I said earlier, revenue is vanity and profit is sanity, that brand awareness is important. That is valuable. There is a dollar amount to it. But a lot of times, and again, my world in marketplaces, it is about low cost. And 70% of the third-party sellers that were new last year to Amazon were China-based. And so not much brand, just real cheap, a lot of taking out the middleman. And if that's your competition, how do you play in that space, right? Are you going to win ever with low cost? So again, going back to the revenue, sure, I can get you a bunch of revenue, but at what profitability and what investment do you want to make in the long term? I mean, are you just trying to get, spend $2 today to get $4 back tomorrow in media or in different investments? And that might be fine. But again, I'd urge that there's both a short-term and a long-term goal to that revenue. And there is some investment up front that's needed to build a brand, to build even ratings and reviews, right? To get the velocity to start engaging some of those algorithms that work in your benefit. All that is going to take an investment. And, you have to really look at whether it's a crawl, walk, run, 3, 6, 9 month roadmap. That's all important to think about for that revenue goal. It's more than just let's spend some ad dollars and then we'll get revenue, and that'll just go on and on and on. That's also not scalable, right? You need to think about that organic value prop. You need to think about, how am I going to build lifetime value and cross-sell, upsell some of these customers? How am I going to get their data, their email addresses? All important aspects, sometimes more than just the sale itself.
And I think, it's very intentional. Like if you're going to do that for 369 or whatever, like you said, if you're laying this out in the numbers with the target equity valuation, you're sitting there going, I'm willing to burn maybe 500 grand in the pursuit of, here's my thesis, but here's what I'm going to judge whether it's working or not. Right. And to get to an outcome, right? Like you're not just blindly, just like I joke around, like so many people run their business with revenue, gross profit, checking account.
Yeah.
And that's it. Revenue, gross profit, checking account. And like, so you have this, the truth is not really in there of how well the business is doing. So let's unpack some of your measurements and KPIs of health. And then maybe we can kind of set the foundation, Jeff, like that. And then I loved the example of the kitchen versus, I can't remember what the other product was.
Yeah. The wooden puzzle. Yeah.
Wooden puzzle, and how some of these concepts apply to the decision-making that you would have and different things like that. Let's talk, let's say, look, there's a lot of assumptions here, but let's say someone actually had their right products and services broken out where they made their money. And again, this is, like I said, we're making a huge leap here, but assuming that they have the right margin analysis and the right geocodes all broken out based on, now they're just sitting down with you and saying, all right, Jeff, now here's where we make our money and why. So then how are you then layering in a marketing strategy, and what are some of the important KPIs or concepts that we need to start thinking about?
Yeah, one of the important metrics I hope most people have heard about is contribution margin, and that's really the dollars you've got left to spend to get a sale.
Explain it, would you? Because we don't talk about it enough, but and people really need to know this.
So let's say you have a product and the AOV, the average order value is $40, and you want to do this at the product level. So if you've got 10,000 SKUs, I would advise you do this 10,000 times. You can copy down some formulas pretty easily, but let's start with one product. It's about a $40 price. You need to look at all of the costs that go into building that product and getting it into the customer's hands. So you've got your operations, you've got your cost of goods sold, you've got any damaged goods or returns to factor those into, shipping to a warehouse, from a warehouse to the end customer. And let's assume that's $20 in total, right? So that's the hard work, right? Calculating all those things, understanding
getting the right data.
Once you get that in place, and again, COGS, the cost of goods sold, or the manufacturing cost, probably the biggest percent of that. And you might have a percent for your business. So even if you're like, hey, I have 10,000 SKUs on average, it's about 25% of the sales price is my COGS. Fine. Copy that down. That's better than nothing. Mm-hmm. And then as the AOVs differ, you'll see the different COGS play into it. So let's assume that all those costs are about $20. So this is simple math, right? You now have $20 left, which could be your profit unless you spend it elsewhere, right? So that's a 50% contribution margin. So now I know if I want a $40 sale, I have that $20 of contribution margin to spend to help me get that sale and still be profitable. And maybe, again, I want to spend all 20 of it just to kind of boost volume. I could do that, but that's the number I have to work with. And so
clarifying question too, because you're talking about contribution margin specifically for that product.
That's right.
Because you can also go a step further and do a contribution margin for your whole company. So that way you can figure out how to double down on everything after a certain dollar amount. But you're specifically talking about that product
for the product. Yeah. But if there are business level fees that you want to roll into some of those costs that we talked about, your overhead, benefits rates, agency costs, whatever, please do that, right? Because you really want to get that true number. I can only spend $20 to sell this $40 product, not a penny more, or I've lost money, right? So
that is so important, man. So few people have that data, and the number one thing they should do is go find that information. Would you even work with someone if they don't know that?
Ideally, no, because this comes down to, we're going to go with technology, right? Because there's technology that's going to manage it. Before you get to the technology and setting up goals with the technology, we have to translate that in this advertising world, right? So again, you've got $20 to spend. Let's say you want to spend all that on advertising, or that's what you're focused on putting that $20 toward. So now you have your return on ad spend, right? Sales divided by cost, $40 divided by $20 of cost. So you have that 2-to-1. I'm using simple math, break even. So now I'm going to program my technology, and there's technology for search and social and marketplaces. Some do it all, and say, hey, maximize volume for me as long as my efficiency is north of $2, right? That ROAS is $2, right?
Yep.
And then if I've got another product, again, the Play Kitchen may have more profitability. Hey, $1.50, maybe less, $3.50. So now you get down to that product level, that SKU level, and technology going out there and saying, hey, I'm going to go buy Facebook ads, or I'm going to go promote this in sponsored search results in Amazon, as long as I'm north of that $2, $1.50, $3.50, whatever the goal is. And then I sit back and I look at the results and I say, oh man, now it's the one that I've got at $2, I can only, for a couple of core keywords that I really think describe the product well, I can only get to 4th or 5th place, right? So now I have to look at my conversion rates, right? Now I have to look at my offering. I start wanting to look at competitive, right? And where's my price compared to others? Because price does matter in a lot of this. And at the end of the day, I might say, hey, I've done the best I can do, and 4th place is the best I can rank in paid listings, and it is what it is, right? I'm gonna have to go find other keywords and misspellings and on and on, or I need to focus the budget on other products where I have a bigger margin and the competition's a little less. So that's essentially kind of how we go through it. But yeah, contribution margin, the break-even ROAS, and then a third one that's important too is total ROAS. And this one's definitely specific to the world of Amazon, where there is a relationship between ad spend and organic visibility. So instead of the typical ROAS of sales divided by cost, I now want to look at the sales of my advertising revenue and the sales of my organic revenue divided by that advertising cost. And that's going to give
because
me
you're going to see it all, because you're going to actually
right.
start to see that ratio. Oh, super freaking
right.
interesting.
Because
man.
that ad spend, you do have to attribute some of that spend to the organic success. You can't just live in those silos. So that total ROAS is going to give me a good view. And then I can look at my total ROAS and say, hey, even though my ads might have just broken even at $2, but I can get a lot of volume from it, my organic and that total ROAS score is actually getting me to a $6, $8, $10 ROAS. And that's where my profitability is going to be.
Awesome. Love it. And let me know if this is actually applicable. So I think why wouldn't you be able to do that to any business where I think about these crazy people these home services businesses, Jeff, in the Minnesota, or they're all over, in every marketplace, $2 million in billboards because we did enough and it'll eventually work, right? They can do the exact same thing where I'm assuming with that kind of a calculation to say, we know that the uplift in inbound calls or forms filled or whatever it is so the concept is kind of the same. And would you agree or disagree with that?
I would agree. It's harder to measure, right? And then, there's that crazy word incrementality, right? Would you, because that billboard and somebody passed by it, would are they more likely to buy your products or services than if that wasn't there? Did they even see it, or were they on their phone, eyes on the road? Who knows?
Right.
Watch out for those snow plows in front of them.
I always think it's just I brought up the example because it's the most ridiculous example, right, of how lack of information you have compared to other metrics that even a salesperson, you could track phone calls or whatever, but when you're using these words, these acronyms of the average lifetime, did you say order, ROAS? Is it
AOV, average order value?
So then with that average order value, would you be able to with some other terms that people are familiar with, the client acquisition cost and the lifetime value of a customer? Because you could have someone that orders it, but then over time, there's a ton of profitability, but then also here's where I kind of get into my numbers too. And I'm curious on how you would react or how you'd respond to this is so let's say someone has an average lifetime value of that customer of let's say it's 3 years, 10 grand a year. So 30 grand. Yeah. And it's maybe less applicable for more e-commerce, but then you would say, okay, of the 30 grand, I can spend 20%. So then you say, okay, I can spend $6 grand to acquire that client, but then you're dealing with more cash flow issues because you don't want to jam it if it takes a long time to get the numbers. But so how would you then explain client acquisition costs or lifetime value of a customer in kind of the context that you're talking about?
Yeah, it is a little different than looking at the revenue and the return on ad spend, because you're kind of moving over to a CPA, cost per acquisition, CAC, or cost per lead type model. It is different. Back in the early 2000s, I'm dating myself. The first I'd ever heard of Amazon was they had an affiliate program, and they're like, hey, if you go and make a sale on our platform using all your media, we'll give you $100 a new customer. And I'm like, weird. So I'm like, cool, let's try it. Did it. And, I was getting new customers for them, $25 average order size, and they're paying me 100. I'm like, guys, how on earth is this profitable for you? And they're like, oh, we're using a 10-year model. And I'm like, ha ha ha, silly company called Amazon with a dumb name. Like, what do they know? I'll take their money all day. But now you fast forward, 20 years later, and you think about how many products you bought from them and how much you love their service, and like they're the ones laughing to the bank. So you're right, that's a very different model, but that is going to be upfront cost, and that also assumes, and again, hopefully you've got some data to model that the customers really will be around that long, that you will continue to be able to upsell, cross-sell them at the rate that you modeled off of with your original data. So I do think those are important metrics. From my world in marketplaces, I would say it is definitely more focused on revenue and revenue acquisition. And then, because Amazon and these marketplaces are going to very much limit the customer data that you get, that's almost a thing of the past, because websites is really where you have to go to be able to capture email addresses and get more information. Amazon holds all that. So they've got some email programs and some ability to remarket through Amazon emails, but you don't really own that. So it's become a little tougher to do that off of your website. So, if that is a goal, I'd say, website media and acquisition is probably more of a focus, because you will collect more data, and then you can extrapolate what data you have for the cross-sell upsells for lifetime value.
But very helpful. Thank you very much for that explanation. But I think what I'm hearing too is like, it's still, the data still matters in this plan. You have to have this as part of your plan. Otherwise you're just truly just guessing. So but also what I find interesting too is with a lot of entrepreneurs, people listening could be in e-commerce, they could be in manufacturing, they're in services, they could be in, you name it. And their model is going to be slightly different. And so if they're looking at working with an agency or whatever, marketing strategy they're putting in place, it should be slightly different based on their business model. Right.
Yeah. Yeah. And data will lead them there. Even in the, your crazy billboard example, that could work for somebody, but you have to test it. And while it's harder to test, some simple strategies like on off, right? Like have your billboard for a month, and assuming seasonality is pretty flat. When you don't have it the next month and your rest of your media mix was the same, you didn't do anything different, run any different specials, you can more or less attribute roughly the difference in sales to that billboard, right? There's some software and media mix modeling helps you do that on a bigger scale, right? So, I spent X this month, Y next, and then everything else held standard, or you can do geo holdouts. So in some markets, again, I work with Lowe's a long time, right? Online to offline is so important. You're researching, we get you to the Lowe's website, they figure out what they want, and then they go in store. But so we have to be able to measure that. Loyalty programs certainly help a lot as kind of that identifier across platforms and into stores. But you do need to measure that incrementality. So you do need to look at, hey, these markets I'm going to turn off, and they're statistically significantly, equal to, this other group of markets. And so I'm going to treat just one marketing mix different. And I can attribute the change with pretty strong statistical success and replication between the two. So it's doable all the way down to your local billboards or whatever. But again, you got to have that data mindset going into marketing. And if you're talking to or have a marketing person that doesn't have that data mindset, everything really is measurable, and you can get into incrementality. You can get into lifetime value. You just got to get creative based on your business, to your point.
Thank you very much for saying that, because it's just excuses at this point, right? You need database marketing strategies, but also you and I started this conversation assuming that they're financials, that they can get this information.
Yeah.
Right. I don't know, from product line profitability to how the I can't even think about putting a marketing strategy in place without having profitability by product line and who's in your customer information. So have you seen I don't know if you've got any stories of what happens when people don't do the data on the finance or the data on the marketing, what could go wrong?
Yeah, I mean, you can imagine you run out of
Right.
money, right? If you're not smart.
That's the end of the rainbow, right? The wrong side.
I do see some newer, whether it's they have a differentiator or they're trying to create a new category. That is an area where you probably do need to invest and probably break even at best. But again, at least you're breaking even, right? You're not losing money. So I've definitely worked with many clients and brands where they were new, they had something new, and they were going to invest in it, and the numbers were continually red or in the red, and they kept at it, and we said, hey, we could get you at least to break even, but it's going to cut back on your volume, and they were willing to continue to risk or lose money to drive the top line revenue. So there are reasons where it could work, or the clients might not have the data yet, and or want to continue to invest. So yeah, it's not crazy talk, but again, hopefully your agency in my case is more of a consultant, saying, hey, here's what you want to do if you want to exit, if you want to sell your business someday, if you want to be wildly profitable. Here's the smart way to do it without losing the shirt off the back, in the short term.
Well, and I think you mentioned something that's like crucial. It's like, if the goal is a more equity, the larger equity valued company, then like that decision process should be fairly justifiable, whether it's really how much cash you have to burn for a year or 5. But like, the reason is a more valuable company, not more revenue. And I like what I find very interesting too, Jeff, is like how when you have a plan that has a specific timeline and a specific, goal, the constraints become way more visible, and everybody's got these trade-offs, and even Peloton and all these bigger companies have now realized that the constraints still apply to them. And so like, how do these constraints of a timeline, like when you're talking about the metrics that you're talking about, how does that impact your like rolling out of messaging, marketing strategy, different channels? Like, how does that impact your ability to roll out a strategy and test what works?
Yeah. I always say, one of my favorite quotes is at the root of all anger is violated expectations. So
can you say that again? I love it, man. That was awesome.
Yeah. At the root of all anger is violated expectation, right? If I'm ever dealing with an angry client or an angry, they thought one thing would happen and something else happened. And we or they or nobody was on the same page, right? To document everything and have those KPIs clear. But, I think it does go a bit to, back to that is have a roadmap, understand what, a crawl, walk, run looks like, and revisit, quarterly business reviews are usually a great trigger. Let's look back at the last 3 months, the next 3 months and beyond. And also just keep ourselves honest in terms of what we pushed off, what we accomplished, what we didn't accomplish, what was dumb 3 months ago that we thought would be smart by this time. So, those have really helped us, I think, is just, keeping everybody accountable and documenting and setting expectations appropriately with a roadmap.
Well, and isn't the expectation setting has got to be a hell of a lot easier too, because the amount of meetings I've been in, Jeff, where it's like, what are we going to do? And everybody has a voice of like how they want to market, how they want to use the spending dollars, and like how difficult that is to get people corralled to even understand why there are trade-offs. Right. Yeah. And like what the constraints are. Like, I'm trying to think of even like, it's almost like so straightforward, but like, I just know the hurdle that people have to go through to get there. And like, what are the things that you've seen that help people get to the point where they can get visibility into, or having those conversations that are not, tension filled, or like, they're trying to lobby for their marketing dollars. I mean, how do you get to that? Like,
yeah, the first question I always try and understand is like, and it happens a lot with digital marketing because it seems like, every few months there's a new channel, and, TikTok was the flavor of 2022, right? Oh, we got to go test TikTok. We got to go do some TikTok ads, whatever. In marketplaces, right? I'm sure, Walmart's had a really hot year. They've fixed their auction. They're much more profitable. CBCs have gone down. Oh, we got to get into that. So for me to understand, is the overall marketing pie getting bigger? Usually the answer is no, right?
Mm-hmm.
So therefore the slices have to change, right? So it is understanding the trade-offs, right?
Interesting.
So
Yeah.
yeah, listen, I'd love if the pie was getting bigger, but going back to previous examples, like, hey, we all know consumer behavior is changing. There's things going down. So if you're still in billboards and newspaper, print, or there's certain channels that don't measure as well, and that's kind of where you want to be, is have a nice even playing of here's what the return on ad spend is across all platforms, and say, hey, sure, we can test TikTok and let's keep 5% of our total budget and maybe a flexible test account so we can flex in and test and learn from a TikTok or whatever. But if TikTok goes through the test and it's at a $3 return and everything else is at $6+, it might not last long, or it might need to be tested again in 6 more months. So yeah, for me, it's understanding, is the pie growing? Probably not. Therefore, all right, something's going to have to give if something's going to get. So let's talk about performance or consumer behavior and trends.
So then, love it, man. So then let's apply that to the kitchen and the puzzle. Like, so then how do you actually start? Just walk us through kind of like a scenario. Like, how would you approach those two product offerings and like assessing the messaging, where to place the ads? Like, how do you formulate a plan like that?
Yeah. So a lot of it in terms of the bidding, right? We work with a lot of bids. And programming the technology to say, hey, on an hourly basis, go and see if competitor activity has changed, cost per click, CPCs have changed, bid up or down accordingly, right? Inventory is low, start bidding down, or raise prices, right, if inventory is low. So you have kind of all these if-then statements. People sound fancy, like to call them algorithms, but we basically write all of those at the product level. And let the tech do its thing. And when the tech has really maximized out kind of the bidding where you are within a channel, we then can look at the product offering itself. So now it's like your price, your product, maybe the reviews are poor, the title's descriptions need to say, by the way, just if we see a bunch of bad reviews come in, like, hey, I never knew this, and it's like, ooh, let's write that in the description. Hey, you should know this. That's typically how we go through it and understand, like, all right, therefore this should get this budget because the technology is going to spit back and say, here's how much it can spend at this return, and here's what something else can spend at that return, and then we work to just continually maximize let's get more average order value, let's try and get better price points. Let's look at all the different levers that we have to improve conversion rate for that product.
I can only imagine that, like, because I've never seen any of your guys' dashboards or anything like that, or how you guys are seeing that data. But like, when I look at someone's financials after we onboard them into this dashboard offering that we have, this FP&A tool that ties to the long-term equity value, everybody like wonders, Jeff, like, what should we be working on? And all the annual planning going on right now. And like, there's a point to this comment. So like, when I look at the financials, I'm like, I don't need to know. I just know. I don't need to know what the levers are right away. I know that once we organize the puzzle in a way that freaking makes sense, the levers are going to be 3 to 5 of them. They're going to pop right in front of our face. Yeah. I mean, is that kind of the same way? Like, again, I've never seen your guys' dashboards, but does it become more obvious of like, hey, we got to try this and that? So it's not like 2,000 things you're looking at. Is it like 5 or 10 or?
Yeah, I mean, it is. There's certainly 5 or 10 key levers. To boil it down even more, I mean, we look at the e-com or the retail sales equation is traffic times conversion rate times AOV. So you can mess with how much traffic is getting to your product page. You can mess with the conversion rate of that product page, and then you can mess with the AOV and the price of that product page. So traffic is really important. And again, in my past life, when it was like search and social, it was like, let's get the most efficient traffic that's likely to convert to a product page, cross our fingers and hope they buy. But there's that whole middle gap there of like, well, what can we do to get better product images? Maybe we can do an infographic, right? Maybe we could do a product video, maybe some lifestyle shots of it in use. There was one example we did with a client where they had gloves, rawhide looking work gloves, and they were deerskin gloves, but they were triple the price of other work gloves. And the client's like, but they're deerskin and that's better. And we're like, cool. I don't know why. Well, you can grill with them, right? And they're heat resistant. Cool. Like, let's do an image of or a video of somebody, doing that. let's put a comparison of the qualities of deer skin versus goat, cowhide, whatever else, right? Those are all ways that we improve the conversion rate. So again, we were still getting work glove traffic, but now it converted a lot higher because we worked on that conversion rate. And again, AOV too, right? Maybe we need to build up more sales, get more ratings and reviews because they are so great because they're deer skin. Cool. Like, let's lower the price a little bit, start building up some sales, some reviews, and then we can jack it back up a little bit later once we've got kind of the creds to demand a premium.
I just love it, man, because it's intentional, focused decision making that you don't know all the answers, but you've got parameters that make it obvious what you need to be tweaking. So, which by the way, like, I mean, if the listeners are like, yes, this is e-commerce, but this applies for anything. I think about my old sales job or old sales business, Jeff. I mean, it was copiers and managed IT services. We had 20 sales reps. They needed, like, all of this applies to the metrics, the phone calls, the meetings, like all like the product service demos.
Right. In a retail, traffic is, you can pay more for an end cap, right? And you're going to get more traffic and more eyeballs, but that's going to cost you money. Did you build that in, even though conversion rate and more product sales are going to happen? Did you build in that extra cost? Just like you would in the advertising that you did to do an end cap. So yeah, it is applicable offline and in other industries.
Which then ties. So like, I want to, like, when I think about like the power of this information, the financial information, the marketing information, everything you just talked about, now you're truly kind of the Wizard of Oz, pulling these levers for profitability, which more profitability is better for everybody, right? Ideally that's resulting in more cash flow and a healthier business. But also there's this concept, Jeff, that we talk about a lot in Principle 4 is about growing value, of like creating sustainable, predictable, transferable cash flow, which is essentially saying like, hey, I need these functional areas like sales and marketing. Here's how it all works. Here's the baton to the buyer. And you're going to get paid more money because they have more trust in what you're doing. So I don't know if you got any stories, because I know you and your partner own companies. So like whether it's you guys looking at businesses or if you've been an agency and a company that's selling, like when this buyer and seller of the asset of the company is having this conversation and you have this data or don't, I don't know if you got any comments on that.
Yeah. One of our own brands is Lumi Pets. So they're little light up silicone night lights for children that keep the monsters away. We are in a ton of brick and mortar stores, so Walmarts and Targets and Bed Bath and Beyonds and more. So what we found is the name recognition of that, or people seeing it and then later purchasing on Amazon or Walmart.com actually is pretty high. So that's one where we're still working through the math to understand that attribution between the kind of the offline and online. So, but at a high level, we can say, hey, we can be a little less profitable online since we know and we've got customer feedback that they basically, have been influenced by the in-store purchases and displays and where you can poke and touch these little squishy guys and then have gone and bought it online. So that's really helpful. And then, especially if they're buying on our website, again, cross-selling and upselling, whether it's, new animals that we come out with, new molds, or, they've got, gifts to give, more children. That's been a good sense of, lifetime value and upsells too. So yeah, I mean, that's one with the offline to online.
Which very helpful. And I apologize if great case, great example, great story. But taking it a step above the actual like profitability and cash flow of the company towards like the overall value of that company. So like if you were going to like look to buy another brand, or if you're looking, like when you're like, I guess I'm going to say it this way, Jeff, put your investor hat on and say, okay, you're looking at a company that does this or that doesn't do this. How would that impact your decision-making of value and what you're willing to pay based on the data? Like, I mean, like just kind of like, how would you approach or just mentally think about it?
Yeah. It goes right to the profit line for us. So what are their margins? What's their contribution margin? How are they managing the contribution margin? What's left for profits? I think we see a lot of companies that look for investment that their profit margins aren't big enough to really realize a strong investment. So even if they've lost money in the short term trying to build their brand and, brand awareness, we still look back and we're like, oof, your margins are so thin, or your competitors are out there that are going to drive your price down, with their differentiators or their low cost. So that's probably where we look at it. And again, to get to a better profitability, doing this math and understanding. So we do this math when we look to partner, potentially buy inventory to sell it ourselves, like on consignment or whatever. We do this same math for ourselves and for our own brands, like truly understanding everything that would go into it, what's left to then use for ad dollars and profit.
So can you makes a ton of sense. And I think that it kind of makes sense too when I think about all the aggregators out there, when like if they've got their equations, they can just look at the revenue and different things and kind of like back into their own math. From like a buyer's perspective, from your lens, would you, let's say all things being equal, like of the profit margins and the products and the services and something like that, like if someone had all this data versus didn't have any of this data?
Yeah, it would scare me. Yeah.
It's just plain and simple. It would just scare you. Like, would you even entertain it? Would you try and back into the numbers? Some of the reason behind the question, Jeff, is I pretty much what I've been saying for years is like, if you don't do this work on the numbers and the marketing and your strategy, someone's going to do it for you and pay you half the price. And I just don't I mean, or like, would you even entertain buying someone?
Or walk away because, my time is my biggest limited resource. And, I got to go and do all this work and all this investigative work and put all the numbers together. And, if it's already done for me on a silver platter, I can real quickly say yay, nay. But it needs to be done before the purchase is going to be done. So they better have some pretty awesome, trademarks, differentiators, whatever it might be, for me to do the math myself, because, time is limited.
Interesting, man. So as we look into coming into next year, actually this will come out next year, but like, how are you, like, what is the sophistication level? Like, how many people are doing things like this? I mean, I know you guys write a bunch of reports and stuff like that. I mean, I'm watching ad spend. I mean, we all know what's going on to the tech providers right now. And like how is this all going to be impacted? And like in next year, like what are some of the trends you're seeing?
Yeah, it's there is a ongoing industry joke of like how many people you would see this year at a conference versus if those brands would be back the next year, because they're blowing money, they're not doing the due diligence. They might have a flash in the pan that wasn't profitable or maybe quickly acquired. I've actually seen the smaller and the mid-sized companies that are out there are the ones that are doing this well. It's the big brands that aren't. And a little bit is, you get into that brand awareness. So, or they just, again, even in my previous agency, didn't have kind of that financially minded, consultant group in their books, in their business. Maybe they didn't even want to share that level of data. That certainly has happened to me, where you ask why, and they say, well, we don't even know. And it's like, how do you not know your cost of goods sold or your product margins? So the bigger ones, I think, look at it as maybe the bigger opportunity for them to sharpen their pencils and really blow it out of the water. But typically they're looking at their, traditional historic returns and say, hey, I need that over on TikTok or on Amazon or Walmart, some of these newer platforms. And you're like, okay, cool. That's one way to do it. But I will guarantee you that Walmart and Amazon are going to perform differently, or Google and Facebook from TikTok. So I don't know, maybe it's a little apples to oranges. Maybe let's step back and say, what are my product margins, right? What's the opportunity, and how do I break even or grow once I know those numbers? So again, the small brands know with limited money what they can spend, what they can't spend, versus the big brands who are probably chasing data that comes from other channels.
Or the hype of whatever the market is telling them they should or shouldn't be doing. What is I know we're getting close here on time. I was going to ask you, so like, a lot of people, the whole recession and everything there's a lot of undercurrents, right? Like no arguments. I've been talking about it a lot, from supply chain to labor, to inventory, to geopolitical, to interest rates, inflation. I mean, you name it, right? It's probably going to be more the next, when this comes out. I have a thesis that like the people that know this stuff are going to be fine. I mean, it's still a storm, but you can, as long as you know how to do this stuff, you can navigate the storm. But like, what does this do to ad spend? Like, what would your thoughts when people like, ad spend becomes the first thing that people cut? But like, how would you respond to someone that thinks that way, or that it's going into a recession, or potentially has a negative impact on the demand for their company? How should they be thinking about marketing spend?
Yeah. So the math we talked about, you want to do that quarterly at least, maybe even monthly, right? Because your product costs are going to change, shipping rates, all the wonderful macro and microeconomic factors. So that is definitely something to do on a quarterly basis. Second, if you've done the math right, it's really tough to cut or argue against, right? Because it's like, hey, we've put it all out on the table, including agency fees, your salary, whatever. Like, this is profitable. Like, of all the places you're going to cut, why would you cut something that is profitable, right, or is above
Right.
break even? So, I'm biased usually in that situation, right? Managing that ad spend. But again, if your math is right and correct, it's really I don't want to say bulletproof, but it's pretty strong to say, hey, this probably shouldn't stop because it is driving profit, and we're not focused on that vanity that is revenue.
Oh, dude, you know what's so interesting? I'm watching your demeanor, and like it's kind of the same thing where like you're like how the conviction that I have when I go up and I talk about all this stuff. I'm like, dude, I didn't invent any of this shit. There's an income statement, a balance sheet, and a cash flow statement, and there's a value of this asset. And like, I can rest assured, like, this is how the financials work. And this isn't some consulting Venn diagram that Ryan created, because I'm watching you versus
it's
like,
not a gut feeling. It's like black and white data. It's like, there's no emotion there. Like, you don't want to do it. You don't have to do it. But I mean, that's real profit, right? Those are your numbers.
Right, man. And like, when I say your demeanor, because like how many like marketing or sales or consultants or strategy or you name the XYZ consultant where they start to get defensive, right? Because they're just trying to defend their value with something that may or may not even be successful versus like, hey man, like it's either going to work or not.
Here's what it is. Yeah. If Google or NCAPS and physical retail are working better, like I'm not going to lose sleep. Like, you've got that data versus this data. That's an easy decision.
Yeah. I love it, man. So I know we're pretty much done here because you got to go. Best place to find your guys' services. How do people get in touch with you?
Yeah, aiCommerce.com. aiCommerce.com is probably best. And we got all sorts of contact us forms. We do free audits for marketplace spend, such as Amazon. So always happy to spend a half hour with anyone just trying to improve their world. And again, as you saw, my focus is education, right? Like, I really want to give back to this industry that's given me so much. I've taught at University of Chicago, Wake Forest, and more. Like, education's key. So again, anybody that is looking for a little more education, a little more kind of that consulting focus would be a great fit as a client, or just a conversation as a one-off. So exciting.
Awesome, stuff. Jeff. I love it, man. Last question for you. And I don't know if you've got this in some of my interviews. I asked people what the word intentional is. It's the name of the show. I've gotten like 150 plus definitions. I love it. So not to put you on the spot, but what is the word intention? Well, not to put you on the spot, but I'm going to put you on the spot. What's the word intentional mean for you?
Clear, planned. I go back to the expectations being set and the roadmap in place that we talked about earlier. And that's intention, right? I know where I'm about to go before I go there, and then hopefully do my best to get there throughout.
And based on your definition of, so there should be no anger, because the correlation with expectations and reality is exactly one, right?
That's right. Perfect.
Jeff, thanks so much for coming on the show, man. I really enjoyed it.
Thanks, Ryan. Thanks, all the listeners. Take care.